Dollar stands tall as buyers brace for Fed to move large. Singapore. The U.S. greenback stood by using a sparkling 20-year peak on Tuesday, and pretty much the whole thing else nursed losses as buyers braced for aggressive Federal Reserve price hikes and a probable recession. Markets have scrambled to wager on rapid-fire hikes inside the wake of an suddenly hot inflation studying on Friday. Consecutive 75 basis factor fee rises in June and July are close to fully priced, sending shockwaves throughout asset lessons. The greenback has received with yields and as traders are looking for refuge from the storm. The dollar index scaled a two-decade top of 105.29 on Monday and held at that stage in Asia. It has hit one-month highs at the euro, Australian greenback, New Zealand greenback, Swiss franc and Canadian dollar, and it made a clean one-month top of $1.0397 per euro on Tuesday. Sterling sat with the aid of a two-year low at $1.2163 as the Fed is seen outpacing the Bank of England, that's anticipated to deliver a 25 BP hike on Thursday. Even the Norwegian krone, which has been supported via corporation oil prices and a relevant bank that started trekking closing 12 months, touched a two-year low of 9.9295 per greenback. The dollar appears to be the stagflation hedge of desire, said Bank of Singapore strategist Mo Siong Sim. The market is beginning to turn loads extra nervous, he stated. On the inflation front, matters do no longer appearance accurate and the Fed needs to respond. The Aussie steadied at $0.6945 through the Asia session, stabilizing with S&P 500 futures, however that is nevertheless close to a check of its May trough at $0.6829 and analysts remained careful and trade skittish. AUD. Nerves about legitimate intervention also gave brief respite to the yen, however it became soon on the foot again after the Bank of Japan accelerated a spherical of bond purchases to knock the 10-year government bond yield again to its 0.25% cap. It final traded at 134.66 in step with dollar after hitting a 24-year low of 135.22 on Monday. Given Wednesday may see the Fed move 75 bits per second and flag greater, at the same time as the BOJ on Friday will most effective flag extra bond buying, JPY isn't always going to stay at those tiers for lengthy. It's going to get tons, a whole lot worse, stated Rabobank strategist Michael Every. Fed Watch. The Fed concludes a two-day assembly on Wednesday and CME's Fed Watch tool suggests markets priced for a 93% hazard of a 75 foundation point hike, which would be the biggest due to the fact that 1994. Goldman Sachs NYSE, GS, hints 75 basis factor movements at both the June and July meetings and costs at 3.25–3.5% by year cease. Futures show expectations of nearly 200 bps of tightening with the aid of September, and the two-year Treasury yield is up about 60 basis points in view that Thursday's close at 3.4023%. The 10-year yield is below that, at 3.3598%, in a signal that buyers fear the speedy tightening direction will harm growth and probably bring on a recession. U.S. The coverage mission is that the Fed has no idea how lots monetary tightening is wanted and will most effective find out it has achieved too much, lengthy after the event, stated Société Générale OTC, SCGLY, strategist Kit Jux. Dollar gains have punished rising market currencies, and the flight from volatile investments has battered cryptocurrencies. Bitcoin is down 30% in June and came near dropping beneath $20,000 in Asia before steadying around $22,000, whilst Ether also tested resistance round $1,000. India's rupee hit a report low on Monday. South Korea's received touched its lowest level due to the fact that March 2020 on Tuesday at 1,292.5 in step with dollar, even though it was saved from further losses by using reliable hints at intervention and sellers' suspicion that government were selling bucks. The Malaysian ringgit, Thai baht and Indonesian rupiah made multi-year lows. EMRG, FRX.